Good morning. This is Japanese Economic Review Channel. Today, we are recapping the extraordinary events of yesterday, May 7th, 2026. The Japanese market experienced what we call a global confluence, a rare alignment of macroeconomic catalysts that triggered a record-breaking surge in the Nikkei 225. Yesterday's session wasn't just a rally, it was a fundamental shift in market structure, driven by geopolitical breakthroughs and a global tech supercycle. Looking back at yesterday's closing figures, the Nikkei 225 reached an unprecedented milestone, ending at 62,833.84. This marked the first time the index closed above the 62,000 level. The single-day gain of 3,320 yen and 72 sen officially became the largest point increase in history, surpassing the previous record from August 2024. It was a day where the Tokyo market truly entered uncharted territory. Yesterday's surge was fueled by three primary pillars. First, the geopolitical relief following reports of a U.S. Iran memorandum to end hostilities. Second, the massive momentum from the U.S. Nasdaq, which gained 946 points during Japan's Golden Week holiday. Finally, the post-holiday catch-up effect, where the Tokyo market instantly absorbed a week's worth of global optimism the moment the opening bell rang. The sheer scale of yesterday's activity was breathtaking. Trading value on the prime market reached 10.8448 trillion yen, the highest recorded this year. This massive liquidity was supported by strong market breadth, with 1,190 stocks advancing. This indicates that the rally was not limited to a few tech giants, but was a broad-based move by global institutional investors re-entering the Japanese equity space. Yesterday's sector heat map showed a clear preference for growth. 30 out of 33 industry sectors closed in the green. High-tech and semiconductors, led by names like Advantest and Tokyo Electron, were the primary beneficiaries of the U.S. tech rally. Conversely, the energy and mining sectors such as INPEX and ENEOS faced selling pressure as the geopolitical risk premium on oil prices began to evaporate. While most of the markets celebrated, yesterday highlighted a fascinating divergence. The same news that boosted the Nikkei, the U.S. Iran peace negotiations, actually weighed down energy and commodity stocks. As Middle East tensions eased, expectations for stable oil supply increased, causing a distinct outflow from domestic energy proxies. This illustrates how yesterday's peace dividend acted as a double-edged sword for different market segments. Analyzing the flow of capital, yesterday's 10.8 trillion yen turnover was heavily concentrated in the institutional core, the large-cap stocks of the prime market. While the growth market 250 index also rose, its participation was more selective. Investors prioritized liquidity and established AI-related heavyweights, suggesting that while the tide rose for everyone, the biggest ships were the ones leading the fleet. Beneath the surface of the index surge, yesterday brought several significant corporate announcements. Toto announced increased growth investment in ceramics for semiconductor manufacturing. Rakuten Travel introduced a new booking function for its AI agent, and Junior West entered a capital alliance with Kansai Mirai Bank to drive regional revitalization. These moves show that Japanese firms are aggressively leveraging their capital for AI implementation and infrastructure expansion. In conclusion, yesterday, May 7th, was a, quote, perfect macroeconomic storm. It proved that the combination of a U.S. tech supercycle, geopolitical de-escalation, and a post-holiday liquidity vacuum could redefine the Japanese market overnight. As we move forward from this historic 3,320 yen breakout, the focus shifts to whether this new 62,000-plus era will become the new baseline for global investors. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.